this is the best opportunity I've maybe seen. This is going to be a big statement, but probably in my whole career on venture opportunities. And I think this vintage year in venture is going to be the best one in 40 years. Fair value has doubled in each of the previous halving cycles. Now, I don't think it'll double this time because instead of going from 50K where fair value is today to 100, so you think we go probably to 80-ish.
Mark Yusko begins by addressing the significance of the Bitcoin halving event, which he believes will have a substantial impact on the market. He argues that the halving is not fully priced in yet, as many people are currently distracted by recent demand shifts that caused Bitcoin's all-time high. When the halving occurs, the supply of block rewards will be cut, leading to a supply shock. Despite not as many miners being in trouble due to fixed costs, there will still be some affected. This reduction in supply, combined with steady or increasing demand, will likely drive the price up. Yusko explains that historically, Bitcoin's fair value has doubled after each halving cycle. Although he doesn't expect a full doubling this time due to inscription fees related to ordinals, he still predicts significant growth. From a current fair value of around $60,000, he anticipates Bitcoin reaching approximately $80,000. This price increase will trigger FOMO fear of missing out and boost adoption, particularly once major financial institutions like Bank of America and Merrill Lynch fully embrace Bitcoin ETF. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I actually think the halving is going to have a bigger impact, and I don't think it's priced in. And I think people are distracted by the demand shift that happened that caused this all-time high, and so they're forgetting that when the halving occurs, the supply of block rewards gets cut, and despite the points that not as many miners will be in trouble, there will still be miners who are in trouble because their costs are fixed and the number of rewards goes down, and so there'll be a supply shock event. And you know how supply and demand work, that the price is gonna rise. Fair value has doubled in each of the previous halving cycles. Now, I don't think it'll double this time because now we have inscription fees related to ordinals. And so instead of going from 50K where fair value is today to 100, I actually think we go probably to 80-ish, but we're still below 80. So once you start going toward that new fair value post-halving, then the FOMO kicks in. And once the FOMO kicks in and you get the increased adoption from the demand shift on the Bank of America and Merrill Lynch and the thundering herd finally getting approval. Like, I still can't buy the ETFs at UBS where my Family Harmony account is because my brother-in-law works there, but eventually I will. And I think all of that's going to push us to a very different price level. You know, the cycle exists, and people say, oh, it's going to go away. I actually don't think so. I think it's hard-coded into Bitcoin. And because of that, you're going to have a period where liquid protocols are expensive or cheap. So we try to follow that cycle. And when they're cheap, you know, when Bitcoin is selling below its fair value, people say, oh, what's fair value? You can't determine fair value. Well, you actually can, and there's lots of good models. There's on-chain data, there's Metcalfe's law models. So when the price is 15 and the fair value is 30, we're screaming at clients to allocate to the liquid protocols, but not to trade them. I mean, Robert was talking about this, that there's trading, and there's nothing wrong with trading and high frequency and all that. But we look at it as a expression of a venture capital investment. So, you know, when we launched Morgan Creek Digital back in 2018, our first fund, we could put up to 20% in liquid protocols, and we were in the middle of a bear market, and we sat and we watched the price go from 10 to 6 to 3. And I remember we all going, why did we start this business again? And then it started to turn, and that's when we started to hit the gas. But convincing the clients at that point that was a good idea. Like, hey, you're venture capitalists. You're not supposed to be buying liquid. And remember, 20% liquid protocols, 80% the equity of businesses around the infrastructure. But at the time then, both were attractive because nobody wanted to put money into the venture capital. So we had our pick of the litter to invest in things like Coinbase and Figure and others. So it was the best of all worlds, but we didn't buy the liquid protocols to trade. We still own the Bitcoin we bought in the first quarter of 19 in our Fund 1 today. Now, at some point we will sell it because we got to give the money back. But, and we own the Ethereum, and we own, well, we sold a lot of the Solana, but we still own some of the Solana. And we own all the Graph. So, but we were making those as Bitcoin at the time was a Series B, like. Ethereum was more like a Series A, just means there's more upside. Solana was a seed deal, and the Graph was pre-seed. 97% of pre-seeds go away. That one didn't. Solana went up a lot. Seed deals can go up a lot or not, but it's the relative attractiveness to fair value. So in the current environment, we're back toward fair value in Bitcoin. We're probably over fair value in some of the other coins. So in our new Fund 4, we're doing less in liquid, not nothing, but this is the best opportunity I've maybe seen. This is going to be a big statement, but probably in my whole career on venture opportunities. And I think this vintage year in venture is going to be the best one in 40 years.
Yusko mentions that in the current environment, Bitcoin is near its fair value, while some other cryptocurrencies are overvalued. Consequently, their new fund, Fund 4, is doing less in liquid protocols. However, Yusko sees the current venture opportunities as some of the best in his career, particularly due to the increasing institutional interest and the entry of sovereign wealth funds into Bitcoin mining. Yusko points out that many sovereign wealth funds are investing heavily in Bitcoin mining infrastructure without actually holding Bitcoin yet. This trend is evident in the Middle East, where significant resources are being dedicated to mining operations. Yusko interprets this as a major signal that these entities are on the verge of making substantial investments in Bitcoin.
It's actually interesting. Many sovereign wealth funds are actually invested in Bitcoin miners. They're bringing more Bitcoin mining to their countries. We're seeing it across the Middle East. We're also seeing it across many other countries as well, where there are state-sponsored mining operations. Now, the interesting part from our conversations with folks in the Middle East is mainly around they're not buying Bitcoin yet, but for some reason they want to spend $500 million to build their own mining infrastructure. I think that is a huge signal for some of them entering the space in a much more major way, because they've been investing in a lot of companies throughout the past few years, but now you're looking at what they're building in the Middle East. They're taking gigawatts of power and dedicating it to Bitcoin mining, and yet they don't hold Bitcoin yet, right? And so for those folks who, as they start to mature in terms of their life cycle of getting orange pilled, it's like they're very close to actually dedicating a significant amount of capital to Bitcoin. And they're doing it right now through mining, which is probably one of the most interesting expressions right now for a country to make, is saying, yeah, we're willing to dedicate, $1 billion to mining this year. It's like, okay, well, when are you going to be buying Bitcoin?
Jameson Lopp addressed the first one, right? Which is, here are the lines of code that Satoshi can't even change. Here are he, I used to say he, she, they, but he self-identified once as a he, so probably he. Unless it happens to be the CIA, which probably is, but not joking actually. But the key is, if that wallet were to move, it definitely changes the narrative of that being the nameless, faceless, kind of mythological, almost like a religion, right? But I don't think that would cause as much stress as people anticipate. I do think the idea that you could get enough people to agree to change the supply cap or things, and there are people that talk about that with inscription costs, that it would take a lot of concerted effort. So I don't worry too much about it.
I think one of my biggest concerns, we actually listed as a risk factor in our filings, if Satoshi's coins move. It actually would be a really big deal. I think my first thought would be, did someone break Bitcoin? Because that's honestly the biggest concern, right? Like, if those coins haven't moved since they were put into the wall, it's like, well, here's the next question. It's like, well, why did they move? Is it the actual owner? Was it Satoshi? Or did someone figure out a way to break into his wallet? Like, what was actually done to get access to those coins? I think if there was a Satoshi that came out and he moved some coins and he decided to sign some blocks that actually told everyone that he was Satoshi and he was back, well, then that's a big question, is like, well, who is it? How did it start? We'll actually get a lot better background on what the original thought process was outside of just reading, hundreds of pages of Bitcoin talk forums. So I think it is a big risk, but I think it's also, how did they move? And was it him that moved him, or was it somebody else?
Yusko discusses the hypothetical scenario of Satoshi Nakamoto, Bitcoin's mysterious creator, moving their coins. He acknowledges that such an event could cause significant market stress, but believes that the narrative around Bitcoin's decentralized and immutable nature would remain largely intact. The real concern would be if someone found a way to break into Satoshi's wallet, which could undermine trust in Bitcoin's security. Yusko concludes by emphasizing that while these risks exist, the potential rewards of investing in Bitcoin and other digital assets are substantial. He encourages investors to stay informed and be prepared for both the opportunities and challenges that lie ahead in the rapidly evolving crypto landscape. Please like and subscribe my channel.